Welcome to Know Your Facts, and I have Mr. Shan Said with me from Kuala Lumpur, Malaysia. And previously on our show, we talked about his view on the expected rate cuts. And I would again have to say that he was spot on when he said that a rate cut is going to be there, and we saw it happening. And now I'd like to ask him about the market scenario after the rate cuts. Welcome, Shan.
Thank you, Ali. Good evening from Kuala Lumpur to everyone. I think we have been quite on the dot, I would say, when it comes to market analysis. The market scenario post interest rate cut is quite visible. We will foresee a lot of tangible assets going up. Real estate has become the new global currency. We have to do this program on Dubai real estate because there is a lot of interest. A lot of my friends in Karachi, in Lahore, in Dubai, in Kuala Lumpur, in Singapore, in London, they are asking Shan, what is your analysis on Dubai real estate? I have already said, I've shared that Dubai real estate is a new global currency. In the next program, for sure, God willing, we will do a program on Dubai real estate comprehensively, dedicated to Dubai real estate. In terms of gold and silver, yes, the market is up. As of today, I have just calculated gold is up 64% YTD, silver is up 127% YTD, copper again is up 27%. So these tangible assets are on the upsurge and they are heading north. At the same time, I would say that equity markets will see an upsurge by 8 to 10% next year. It is based on the premise that Fed will continue to cut interest rates, but eventually inflation will show its head. One, inflation will show its head, then Fed will be in a very tough situation. This is the same scenario, Ali, what happened in late 70s when Paul Volcker he cut the interest rate and then he raised the interest rate because inflation was very high, and at that time yields were up 10-year 20%, unemployment was up 13-14%, so it was a very bad scenario. Jerome Powell is making the same mistake what Paul Volcker did in the late 70s. So I foresee tangible assets back in vogue. Those sophisticated and smart investors who are listening to our program, I would say that they should think that real estate is a good hedge against inflation. It's a good hedge against global economic uncertainty. It's a good hedge against global economic instability, which will remain for the next 2 to 3 years. Take position in tangible assets. Gold and silver will continue to go high, not as high as what happened in 2025, but maybe a very significant appreciation in 2026. Oil and gas will continue to be back in the market because there are 11,000 data centers globally, and US is leading from the front with 38% of the market share, and more countries are going into sovereign AI. What is sovereign AI? Countries are developing their own artificial intelligence and they want to protect their data so that it doesn't get hacked. So I think sovereign AI will be coming very strongly into the market. There will be more data centers, and for data centers, you need electricity, you need oil and gas, you need copper, and you need many other metals. So metals would remain in vogue. Uh, Oil and gas again. Climate change is happening. We have seen weather patterns are changing quite rapidly, and there are floods, there are earthquakes happening quite unusually at a very fast pace, and it is keeping people on the edge, and investors are quite nervous because of climate change. I wouldn't be surprised if agriculture prices are going up by 5 to 10% in the next 2 to 3 years. So tangible assets are in vogue back in 1970s. So we are very much in line with the market analysis.
I think that Shan, by and large, your focus has been on gold in the past programs as well. And you had inspired many people to even research this topic. And when we looked it up, of course, me and others as well, I think the outlook, like you said, would not be as bullish as 2025, but many surveys reveal that the market still is looking up for gold. And as far as silver is concerned, like you said, you were pretty bullish about it last time, and I think you have been cautiously bullish about it this time. So I think that these two things are there, yes, of course. And in the next program, I think we should address the Dubai real estate market. Um, However, unfortunately, the issue is that real estate trends differ many times from what's going on in Dubai. But I'm sure many of your fans and friends, of course, are very keen to hear from you. I would be very keen to hear from you about the real estate situation in the Far East as well, especially in Malaysia, Singapore, and other countries in that region. And I have heard that Indonesia is also coming up as a real estate destination. In fact, due to the recreational prospects, many foreign investors are flocking there as well, in addition to other countries as well in the same region. What's your view on that? In fact, even in the Philippines, I've heard, and I've heard your comments about Philippines as well. So I would like you to focus on that area as well.
Ali, you are spot on. Indonesia is back. Malaysia is booming. Philippines is very much on the radar of global investors. So there, I have coined a term called Fabulous Five. Fabulous five countries will be leading ASEAN for the next 3 to 5 years. When it comes to growth story. MIT Malaysia, Indonesia, Thailand, Philippines, and Vietnam. If you ask me about the leading country that is doing significantly well, is Vietnam. When it comes to tourist attraction, Thailand, Malaysia, Indonesia, and Singapore obviously are in the second tier, but these five fabulous countries would be leading the growth story for ASEAN region in the next 3 to 5 years. Real estate has become very attractive in this part of the world in Far East. Many Westerners, they are looking at Bali. Bali has become very attractive for many investors. Malaysia, Kuala Lumpur is very hot. Penang is hot. Then you have Malacca. Then you have Johor Bahru. Johor Bahru has become the data center for Asia Pacific. A lot of investment coming in. So I think yes, in the next program we can surely have a discourse on real estate in Malaysia, Dubai, Philippines, Vietnam, Indonesia.
There's also a talk of the larger impact of the interest rate cuts on the world economy. And would you like to highlight the impact of this cut perhaps on other continents as well? Because I would foresee that many countries in Asia might follow suit, and they may also cut rates. I have seen Pakistan cutting rates about 50 basis points. So I won't say that we would be so relevant in the global scenario, but at least from the regional perspective, I think it would give a heads up for some of our viewers.
Yes, I foresee interest rates going down next year for many economies.
And I would assume you would say the same about other countries in the region as well, including ASEAN.
Yes, according to the market situation, whatever happens next year, yes, there will be few economies that will be cutting rates by 25 to basis points on the basis of economic outlook of their economies.
Are we looking for a significant change in the investment scenario of the world, or are we going to stick to uh, precious metals and assets that have strong footing and intrinsic value? What's your view or take on the crypto market as well?
Those countries that have got natural resources, who have got demographics, who have got strong consumption patterns, who have got young population, they will be very much relevant for the global players. Three regions will be growing in the next 3 to 5 years: ASEAN, GCC, Gulf. When I talk about Gulf, I'm talking about UAE, Qatar, Saudi Arabia, Oman, a lot of global interest in these four countries, and Africa. As you know, Africa has got huge deposits of natural resources. People are very entrepreneurial, young population. I wouldn't be surprised that GDP of African continent will touch between $7 to $8 trillion by 2030.
Always something in the program that leaves people thinking. I am very grateful to you, Shan, for joining us today. I think it was a very, very nice conversation that you and I had. And since we believe in the economy of words, we try to keep this program really compact for our viewers so that anyone who's watching in the office or at work or even at play, they can all watch it and grasp the information. And we've kept this as a weekly feature. And hopefully, if Shan's predictions are on the on spot, then I think we are going to continue doing this program first weekly, and I think after that we would like to do it every day. I think the way Shan is predicting the economy, I think I have to listen to him very keenly. Thank you, Shan. Thank you for joining us.
Thank you very much, really.